Hello and welcome, I'm Charles Aite. Our first story, interest rates have started going up by marginally as the challenges within the fiscal economy reflect on the monetary economy. According to auction results from the sale of treasury bills, interest rates of the short-term financial instruments went up slightly. Charles Nixon Yeboah has more in this report.
Despite its position of keeping interest rates low, government has now been forced to revise its notes by accepting a slightly higher yield for the short-term financial instrument. This is to help meet its target by attracting more domestic investors. It also suggests that the domestic market is still strong despite the recent downgrade of Ghana's creditworthiness by Moody's and Fitch. According to the auctioning result, the interest cost went up by about 0.20%. Government, however, secured a little above 1.51 billion cedis but accepted 1.50 billion cedis from the sale of the T-bills. Government will be happy because it marginally overachieved its target. The 91-day T-bill was the highly patronized. About 957 million cedis was purchased by the investors. However, with the rising interest rate of T-bills, cost of credit will soon start going up, therefore increasing the cost of doing business.
Helping us to discuss is Chief Finance Officer at the Valley View University, Dr. William Sapra. Grateful, Doctor, you could join us. Does this situation indeed reflect challenges within Ghana's fiscal economy?
Good afternoon to you and your viewers. I'm grateful for the call to share my thoughts on the issue of the increased rates in our interest rate in Ghana. This will not come to us as a surprise because as a country, government needs a lot of money to operate. And what government needs to do, and which is happening, is to accept higher interest rate to be able to entice investors to invest in government bonds. So this has come at the right time. But the impact of this situation is that it's going to have an increase in cost of doing business in the country, especially when it comes to cost of production. Also, we will see banks not giving money to production entities, but rather have a leeway or a flexible way to invest in government bonds. This normally is termed as a structural weakening when the economy becomes in a way that the commercial banks are not prevent or refuse to lend money to industries to produce. The other effect that this will bring is that there will be low motivation when it comes to production houses to also produce more. You may also see that companies with excess liquidity also investing in government bonds. And in fact, it's really going to affect production. And also it is going to lead to an unemployment situation because industries will not have the fund to employ. And when it happens that way, our unemployment situation is going to be worse. Already we have about 50% of our graduates who are unemployed because there is liquidity shortfall in the country. And what we can do as a country to remedy this situation, in my opinion, we should have a cap on commercial banks' operation in terms of interest and their profit that they can generate. And because I know commercial banks, they have to increase the shareholders' wealth by making more and bringing more interest. But we should be able to push our commercial banks to also focus on industries. So I'll recommend that probably central bank will advise that the portfolios of commercial banks should be looked at and not to have like 90% of bank portfolios or invested in government bonds. When it becomes that way, the economy is going to suffer. So we need to free up space a little bit to get money to entities who want to borrow. The other effect is that the interest rate going up is going to lead to inflation in the country, which is something common to all of us that we all know, that the higher the interest rates, the higher rate of inflation, And this will also going to make worse our exchange rate situation. And at the moment, we have seen all of these. And so it's good that government, people are giving money to government and interest rate is going up. But then the ripple effect is going to be very dire for us as a country. And we may have to work on the structure of how government borrows.
And we shall keep a keen attention to this development to give you viewers update as and when we do have them. But Dr. William Sapura, we're grateful for your analysis. He's Chief Finance Officer at the Valley View University.